All right, so we're diving into the CNOOC 2023 annual report. And yeah, you've given us a ton of info here about this offshore oil and gas giant. And I'm really interested to break it all down. I think we've got a lot to cover, from their production numbers to their strategies for navigating, this global energy transition.
Yeah, it's really interesting to see how CNOOC is kind of balancing, their core business of oil and gas production with, these plans for a more sustainable future. And this report really does give us, I think, a good glimpse into how they're managing that whole, balancing act.
Okay, so let's maybe start with the basics. CNOOC is a big player in offshore oil and gas, right? What makes them stand out in the global energy scene?
Well, they really dominate production in China and hold a significant position globally. And what's really impressive is they achieved a record high net production in 2023. It was 1,857,619 barrels of oil equivalent per day, which is a lot.
Whoa, yeah, that's a massive amount of energy.
Yeah.
I'm really curious to understand how they manage such a huge operation. The report mentions that their business is divided into a few key segments, right?
Yeah, they have four key segments: exploration, engineering, construction development, and production, and then sales and marketing. Each of those segments plays a really important role in their success, and we can see how they kind of work together to create a smooth and efficient process.
Let's break those down a little bit further.
Yeah.
I'm really interested in their exploration activities. The report highlights some major discoveries they made in 2023, right?
Absolutely. They were incredibly successful on the exploration front. They added 9 new discoveries just in 2023 alone. And, that speaks to their aggressive exploration strategy. And these aren't just small finds either. We're talking significant oil and gas fields.
9 new discoveries. Wow, that's impressive. Where are they finding all these resources?
So they're finding them both domestically and internationally. In China, for example, they discovered multiple oil fields with over 100 million tons of oil each. They also found China's first large deep play coal bed methane field, and that one contains over 100 billion cubic meters of gas.
Yeah. Wow, those are game-changing discoveries, especially for China's energy security. But their exploration efforts aren't limited to China, are they? What are they doing internationally?
Well, they're making significant progress in the Stabroek block in Guyana, and this block already holds immense potential. Their continued exploration success there just further solidifies their position as a global energy leader.
Okay, so they're finding all these new resources, but how do they get them, out of the ground and into the market? That's where their engineering construction segment comes in, right?
Exactly. CNOOC excels at building and deploying that complex infrastructure that's needed for offshore oil and gas extraction. And they're always pushing the boundaries of engineering, especially when it comes to deep water projects.
Right, and that must require a lot of technological expertise and innovation.
Yeah.
I imagine they're facing some really unique challenges in this area.
Oh, yeah, for sure. Deep water projects are inherently complex. You need specialized equipment and techniques. CNOC is investing heavily in research and development to overcome those challenges and make sure their projects are executed, efficiently and safely.
So they find the resources, they build the infrastructure, and then what? How do they actually manage the day-to-day operations of oil and gas production?
That falls under their development and production segment. This segment is really all about maximizing production from the existing fields while simultaneously bringing new discoveries online. It's a delicate balancing act that requires careful planning and execution.
Yeah, I can imagine that involves a ton of data analysis and optimization. They must have some really sophisticated systems in place to manage all of that.
Oh, they do. They're constantly evaluating, reservoir performance, optimizing production techniques, and managing all the complex logistics of offshore operations. And their success in this area is evident, in their record-breaking production levels and their impressive cost efficiency. They've managed to achieve an all-in cost per barrel of oil equivalent of just US $28.83.
Wow, that's incredibly competitive, especially in such a capital-intensive industry. It sounds like they're really focused on efficiency and cost control.
Oh, for sure. They've implemented strategies like engineering standardization and process optimization, to keep their costs down. And this focus on efficiency gives them a real competitive edge in the global market.
Okay, so they've extracted the oil and gas, they've managed production efficiently, but now they need to sell it. What can you tell me about their sales and marketing segment?
Well, CNOOC has a really vast network of customers and partners, both domestically and internationally. They sell oil and gas to refineries, power plants, and various industrial sectors. They also have a strong marketing team that focuses on securing long-term contracts and navigating, the complexities of the global energy market.
It sounds like they've got all their bases covered.
Hmm.
They're finding the resources, extracting them efficiently, and selling them to a diverse customer base.
Yeah.
But what does all this mean financially? Let's talk about their financial highlights for 2023.
Sure, their financial performance in 2023 tells an interesting story. While their net profit dipped a little bit by 12.6% to RMB 123,843 million, this was largely due to the decrease in global oil prices. However, their underlying business, remains strong.
I'm always a bit intimidated by financial statements, but I know they're crucial for understanding companies' performance. Can you walk me through some of the key metrics from CNOOC's income statement, balance sheet, and cash flow statement?
Of course, let's start with the income statement. This statement essentially summarizes their revenues and expenses over a period of time, ultimately revealing their net profit.
Okay, so where did the revenue come from in 2023?
Primarily from the sale of oil and gas, but they also generate income from other sources like interest and investments. The decrease in global oil prices definitely impacted their sales revenue, but their diversified income streams helped to cushion the blow.
And what about their expenses? What are the biggest costs they incur in their operations?
Their largest expenses are typically related to production activities. This includes, exploration, development, and operating costs. But remember, they're known for their cost control, so they manage these expenses carefully.
Right. We talked about their impressive cost per barrel of oil equivalent earlier. So their income statement shows us their overall profitability. But what about their financial health? That's where the balance sheet comes in, right?
Exactly. The balance sheet provides a snapshot of their assets, liabilities, and equity at a specific point in time. It's a great way to assess their financial stability.
Can you give me an example of something important we can learn from their balance sheet?
One thing that jumps out is their massive investment in property, plant, and equipment. This includes all the infrastructure and assets they've built for their exploration and production activities. These are long-term investments that will support their growth for many years to come.
So they're investing heavily in their future, but are they doing so responsibly? What about their debt levels?
Oh, they're managing their debt very carefully. Their balance sheet shows that they're keeping their debt levels under control, which is crucial for maintaining financial flexibility in a volatile industry like oil and gas.
That makes sense. Okay, so we've got the income statement and the balance sheet. What about the cash flow statement? What does that tell us?
The cash flow statement tracks the movement of cash both in and out of the company. It's all about how they're generating and using cash, which is a vital indicator of their financial health and sustainability.
So it's not just about profit, it's about cash flow.
Hmm.
Can you give me an example of something we can learn from their cash flow statement?
Sure, we can see, for example, how much cash they generated from their core operations. This is a crucial metric because it shows their ability to generate cash from their primary business activities. We can also see how much they invested in new projects and how they managed their debt.
Okay, that helps me understand the cash flow statement a bit better. Now, I'm curious about how all of this financial performance translates into value for their shareholders. Are they doing anything specific to reward their investors?
CNOOC is serious about rewarding its shareholders. In 2023, they distributed a total dividend of HK $1.25 per share. This includes an interim dividend of HKC $0.59 that's already been paid and a proposed final dividend of HKC $0.66.
That's a significant payout for shareholders.
Right.
Are dividends the only way they're creating shareholder value?
Not at all. They're also committed to maintaining a strong financial position, which ultimately benefits shareholders by, driving up share prices and increasing investor confidence.
So it sounds like they're taking a multifaceted approach to creating shareholder value.
Yeah.
But let's shift gears a bit and talk about the challenges they face moving forward. No company operates in a vacuum, and CNOOC is no exception.
You're right. Every company faces headwinds. One of the most significant challenges CNOOC faces is the global shift toward greener energy sources. This energy transition is forcing companies like CNOOC to adapt and evolve their business models.
Yeah, I've heard a lot about the energy transition. How is CNOOC responding to this shift? Are they simply clinging to their traditional oil and gas business, or are they embracing the change?
They're fully aware of the need to adapt. They're actively exploring and investing in new energy sources and technologies, including renewables like wind and solar power. They're also stepping up their efforts in carbon capture and storage, aiming to minimize the environmental impact of their operations.
That's encouraging to hear. It sounds like they're not just paying lip service to sustainability, they're taking concrete steps to transition to a cleaner energy future.
Yeah.
Are there any other challenges they need to address moving forward?
Well, the global political and economic landscape is always shifting, and that can have a significant impact on their operations. Geopolitical events can disrupt energy markets, create uncertainty, and lead to price volatility. CNOC needs to be agile and adaptable to navigate these external forces.
So they need a solid risk management strategy in place to deal with all of this uncertainty. Do they address this in their annual report?
They do. One section that's particularly insightful is their discussion of risk management and internal control. They outline their approach to identifying, assessing, and managing various risks, including those related to their business operations, financial performance, and compliance.
It's good to know they're not shying away from the challenges. They're actively addressing them head on.
Exactly. And they're doing so in a structured and transparent way. They're also committed to maintaining high standards of corporate governance, which is essential for building trust with their stakeholders.
This has been an incredibly informative deep dive so far. We've covered a lot of ground, from their diverse business segments and impressive financial performance to their shareholder value creation strategies and their commitment to sustainability. But before we move on to the next section, I want to hear your initial thoughts. What are your key takeaways from this overview of CNOOC?
What stands out to me is how CNOOC is effectively managing its core business while preparing for a future that will undoubtedly look very different from today's energy landscape. They're demonstrating a strong commitment to both financial performance and sustainability, which is a powerful combination.
That's a great point. They seem to be taking a very balanced and strategic approach. All right, let's take a closer look at some of the key highlights from their annual report. We'll dive deeper into their exploration and production activities, their financial performance, and their plans for creating shareholder value.
Okay, so let's dig a bit deeper into their exploration and production side of things. We talked about that record net production. They had 1,857,619 BOE per day, right? And to keep that going, they've got a really solid exploration strategy going on. They're focused on finding these mid to large size oil and gas fields, particularly in some key areas, the South China Sea, Bohai, onshore China.
So they're really strategically targeting specific regions for exploration. What's driving that focus on these areas in particular?
Well, it's all about maximizing their chances of success, right? These areas are known to have, significant oil and gas reserves, and CNOOC's got a proven track record there. They're really good at exploring these regions. They're leveraging, their experience and expertise to pinpoint the most promising locations, and it's paying off.
And their success is clear, in that impressive reserve replacement ratio of 180% we talked about earlier.
Yeah.
Could you explain a little more about what that ratio means and its significance for, their long-term sustainability?
Sure thing. The reserve replacement ratio basically measures how well a company is replenishing its reserves through new discoveries. A ratio above 100% means they're finding more resources than they're actually extracting, which is super important for long-term sustainability. CNOOC's ratio is 180%, which is exceptional, and it shows they can sustain production for quite a while.
That's a remarkable achievement. It shows a good balance between exploration and production, making sure they can grow in the future.
Exactly. It translates to a reserve life of over 10 years, meaning their proven reserves can support current production levels for at least a decade, which is a solid foundation for future operations.
So they're not just focused on the short-term gains, they're planning for the long haul. Now, switching gears to their financials. We touched on their net profit dip a little earlier. Can you break down their financial performance a bit more and the key things that influenced it?
Yeah, of course. So while their net profit did decrease a little bit by 12.6% to RMB 123,843 million, this was mainly because of global oil prices dropping. It's important to look past that single figure, though. Their revenue streams stayed pretty diverse. Oil and gas sales are a big contributor, obviously, but they've also got income from things like interest and investments.
So despite the oil prices fluctuating, their varied income streams kind of softened the impact. What about their cost management? How do they do there?
Their cost management was top-notch. They kept a really competitive all-in cost per BOE at just US $28.83, which shows how committed they are to running things efficiently. They did this through things like standardizing engineering and optimizing processes.
Yeah, that cost efficiency definitely gives them an edge. Can you explain a little more about how this efficiency shows up in their main financial statements, like their income statement, balance sheet, and cash flow statement?
Yeah, let's start with the income statement. Their focus on controlling costs is clear when you see their pretty low production expenses per barrel of oil equivalent, and that helps their overall profitability. And those diverse revenue streams we talked about also help balance out the ups and downs of oil prices.
Okay, so the income statement gives us the picture of their profitability. What can we see from their balance sheet?
Their balance sheet highlights their big investments in property, plant, and equipment, which shows how committed they are to growing in the future. Importantly, they've managed their debt levels really carefully, which is crucial in a volatile industry like oil and gas, so they have the flexibility to handle any bumps in the road. So investing in the future while staying financially sound. Now, what about the cash flow statement? What can we learn from that?
The cash flow statement shows how good they are at generating cash. Their main operations brought in a ton of cash flow, which let them fund new investments, manage debt, and reward shareholders.
That shows how well they run their operations and how strategic they are with their finances. Speaking of shareholders, what are they doing to give back to their investors?
They have a clear plan for rewarding their shareholders. Like we mentioned, they announced a total dividend of HK $1.25 per share for 2023. Part of that's already been paid out, and the rest is proposed. This shows they're serious about giving back to their shareholders.
That's a pretty good dividend payout. Are they looking at any other ways to make their shareholders happy?
Their focus on staying financially strong with a solid balance sheet also helps shareholders. A strong financial position often means investors are more confident and share prices could go up. Okay, so they're creating value through those dividends, smart financial management, and their sustainable growth plans. Now let's talk about their future. The energy landscape is changing fast, and there are a lot of challenges and opportunities. How are they handling all of this?
They're being proactive about adapting to this changing world of energy. They're putting money into research and development, especially in things like deep water exploration and production-enhanced oil recovery, and importantly, low-carbon solutions. This forward-thinking approach sets them up to do well, even as the energy sector changes.
Their investment in low-carbon solutions is pretty interesting, considering the global push for sustainability. Can you tell us a bit more about what they're doing there?
They're exploring different ways to lessen their environmental impact. They're investing in renewable energy sources like wind and solar power. They're also researching and putting in place carbon capture and storage technologies to try and minimize their carbon footprint.
That's good to hear. It sounds like they're not just talking about sustainability, they're actually taking action to create a cleaner energy future.
Right.
Are there any challenges they're facing while doing all this?
Well, one of the biggest challenges is how complex the technology is and the cost of putting these new technologies into practice. But they're committed to investing in research and development to overcome these hurdles. They know transitioning to a low-carbon future is important for their long-term success.
That commitment to innovation really shows. Now, besides the energy transition, what other challenges are they dealing with globally?
Geopolitical risks are a big one. The situation in Ukraine, for example, has made global energy markets pretty volatile. CNOOC, being a global company, is exposed to these risks, which could impact their operations and profits.
So how are they handling these geopolitical risks? Do they have strategies to deal with all the uncertainty?
They're using a multi-pronged approach to risk management. They're diversifying their operations geographically, so they're not just relying on one region. They're also building strong relationships with governments and regulators in the countries where they operate, which helps with collaboration and reduces the chances of unexpected policy changes.
So they're on top of managing these risks to keep things running smoothly. What about their social responsibility initiatives? Are they doing anything to address the environmental and social concerns that come with their work?
Oh, absolutely. They're committed to responsible operations. They've put in place some strict environmental management systems to keep their impact on ecosystems as low as possible. They're also investing in technologies to reduce emissions and manage waste responsibly. And they're actively involved with local communities, supporting social programs and promoting ethical business practices.
That's great to hear. They're really looking at sustainability from all angles, the environmental, social, and governance factors. It's all part of their operations.
Exactly. They know their success isn't just about making money, it's also about making a positive contribution to society and the environment. This commitment to sustainability fits in with the global trend towards responsible business practices, and that's good news for investors who care about the environment.
Right. They're proving that you can be profitable and responsible.
Yeah.
Now, before we wrap up this deep dive, I want to get your overall take on where CNOOC stands in the global energy world.
CNOOC is definitely a big player in oil and gas, especially in China. They're really good at exploration and production, they run their operations efficiently, and they manage their finances strategically, which sets them up for continued success. What's really impressive is how they're proactively handling the energy transition.
I agree. They're not afraid of change. They're investing in new technologies, and they're making sustainability a priority. That really sets them apart. It shows their long-term vision and their commitment to staying relevant in a rapidly evolving energy landscape.
Absolutely. Their commitment to innovation and responsible business practices puts them in a great position to thrive in the future, even with all the challenges and uncertainty that lie ahead.
So they're navigating this complex energy market and adapting to a changing world. It sounds like they're ready for whatever comes next. Now, before we finish up, I want to take a minute to highlight some of the key things we've learned from their annual report and share some final thoughts with our listeners. All right, so welcome back to our deep dive into CNOOC's 2023 annual report.
Yeah.
It's been pretty fascinating, I think, exploring their operations and their financial performance and their plans for the future.
Yeah, it has been interesting to see how CNOC is tackling those complexities in the global energy landscape, and they're definitely staying committed to, creating value for those shareholders.
Let's maybe recap some of the key things we've talked about. Those record-breaking production numbers really say a lot about how efficient their operations are and how they're meeting that growing global demand for energy, right? And then their strategic focus on exploration, especially in those key areas, the South China Sea, the Stabroek Block in Guyana, that's brought them some really impressive results. I think making sure they've got a healthy reserve replacement ratio and a good long reserve life.
Yeah, and their financials, even with a slight dip in net profit, because of those oil price changes, it shows they've got strong cost management and those diversified revenue streams really help. And their dedication to keeping a really solid balance sheet and managing their debt carefully, that gives them a good foundation to grow from.
Exactly. And they're dedicated to rewarding their shareholders, through those consistent dividends and their strategic financial decisions. It really strengthens that commitment to creating long-term value, I think. It's not just about taking the resources, it's about managing the business in a way that leads to success.
Yeah, and what's really caught my eye is how they're dealing with that energy transition head on. Investing in those renewables, carbon capture and storage, all that research and development, it shows they're serious about a more sustainable future. It's not just about going with the flow, they're actively trying to shape it.
Right. And the way they're handling those geopolitical risks by diversifying and forming those strategic partnerships, it highlights that they understand just how complex this global energy picture is. And they're dedicated to running their operations responsibly. Environmental protection, social responsibility, strong corporate governance. It all lines up with what people are looking for these days in terms of ethical business.
Yeah. CNOOC, I think, presents a really compelling case study here. It's a company that's managing that core business really well while also looking ahead to a future that's going to be totally different in the energy world. And they're showing that they're serious about both financial performance and sustainability, which is a pretty powerful combo.
That's a great point. It seems like they're taking a very balanced and strategic approach.
Absolutely.
It's obvious that CNOOC isn't just an oil and gas company anymore. They're becoming more of a full-fledged energy solutions provider. They're adapting to a changing world, but they're also staying true to their core values. I think their journey is a really inspiring example for other companies out there that are trying to navigate all the complexities in the energy sector, but also wanting to contribute to a more sustainable future.
Yeah, and they're not just pulling energy out of the ground, they're generating value, they're embracing new ideas, and they're shaping a better future, I think, for the whole energy sector.
Oh, this deep dive has really opened my eyes. And I hope that our listeners have gotten some valuable insights into how CNOC works and their strategies and their vision for what's ahead. And if you're interested in learning even more, I'd really encourage you to check out their full annual report. There's just so much detail in there that we couldn't get to today.
It's a great resource for anyone who wants to understand the ins and outs of the energy world and CNOC's role in it all.
Well, thanks for joining me on this deep dive. It's always fun to unpack these complex topics and really get a better understanding of what's shaping our world.
It's been my pleasure. Until next time.
And that's a wrap on our deep dive into CNOOC's 2023 annual report. Thanks for tuning in.